Cars are getting repossessed because of this crisis. Cars and trucks are getting repossessed. This is a trend on the rise in the down low. Let's be honest, who would like to admit they are going to lose their beloved ride? Everything from the supply chain to stagflation has made it difficult for people to make their car payments. Even for people with good credit rating, I'm going to tell you the next crisis that is causing this default. Also, the reason why stocks are in a classic bear market rally, and it's about to be over. This will be a juicy episode. See you soon. And of course, smash the like button. Welcome back, everyone, to my Audacious Money Witch channel, where we talk about macroeconomy stocks, bond, and commodity markets. If you like any of these markets, please subscribe to my channel and like my video. And also smash the like button if you've enjoyed today's video. Car repossessions on the rise due to inflation, supply chain disruption. Everything from the pandemic to inflation has made it difficult for some people to make their car payments. Right now, coming out of a supply chain disruption, a number of large lenders went through what I call an affirmation period where they had extensions, says John Morgan with Texas-based repossession specialist group, the American Recovery Association. Those extensions are now over for people behind on car payments. Morgan says we're seeing a steady uptick in a number of repos across the state. People have run out of time to catch up on those payments. Probably about 45 days to 60 days, they're starting to get nervous where you're at, says Morgan. They probably are a little eager to get that money. Economics professor Thomas Turnstall describes the increase as a perfect storm of factors, one of them being inflation. The price of automobiles in general has gone up. We're seeing new cars sell for MSRP, which is sort of unheard of, and the price for used cars has gone up as a result of that, says Turnstall. Just a shortage of the automobiles in general. Something economists are keeping their eye on. Who is defaulting on those payments, something not seen often until recently. It's not only subprime borrowers, but also those with good credit ratings are starting to default on their automobile loans, says Turnstall. It's just a function of fact that everything for the most part is so expensive. Even gasoline, the prices have come down, but it's still really expensive. If your car is repossessed, Morgan says, this is the best thing you can do. You can more or less contact your lien holder and you can talk to them about getting your vehicle back. Certainly they don't want it. They don't want to take that vehicle and send it to the auction and have someone else take it over. They want you in that vehicle. This perfect storm is coming as rental costs in US and Australia are soaring at the fastest pace in more than 3 decades, surpassing a median of $2,000 a month for the first time ever in most major cities. Many renters who typically spend a major share of their income on the rent than homeowners are already struggling to keep up with larger bills at the grocery store and gas station thanks to the highest inflation in 40 years. And rent hikes are expected to persistently push inflation even higher because leases are staggered and renters face shocks at different times. There are 40% of households that are not currently paying their rent and mortgage payments, said they are likely to be evicted or foreclosed in the next 2 months. Let's think about this for a second. Why do people miss payments on their cars and trucks, heading into default because they can't make their rent payments either? Inflation is too high. Their wages are not keeping up with it. Unemployment rates are starting to go up. Even major tech companies are laying off staff. Can the Fed do its job and keep stable prices? They can. They just need to create a recession by raising rates. As you can see this chart, as Fed funds rate rise and create a recession, when they fall, you do see the rent fall with it. Now you see why we actually need to have a recession. So what does that mean to this rally? Yes, it's a classic bear market rally, and it's about to be over. Stocks are in the midst of a classic bear market rally, and the lows haven't been seen yet, says the Bank of America. The summer surge in the S&P 500 should be considered an average bear market rally, and the index remains vulnerable to falling under its recent lows, according to Bank of America. The investment bank, in its weekly flow show note published Friday, looked at the 43 bear market rallies marked by gains of more than 10% since 1929. It found the average of those past bear market rallies was 17.2%. In 39 trading days, the S&P 500 in 41 trading days piled on 17.4% through the close of Thursday's session. The index on Friday moved at around 4,226. Thus far, a classic bear rally and ultimately self-defeating rally. You think SPX 4500 and Fed going to stop hiking? Says B of A, referring to the Federal Reserve's rate hike campaign to cool down the hottest inflationary environment in 4 decades. The S&P 500's jump from its June 16 low found fuel from investors interpreting comments by Federal Reserve Chairman Jerome Powell said a pivot toward policymakers considering cutting interest rates in the face of a slowing economy and potentially cooler inflation. Headline inflation did ease in July to 8.5% from June's 9.1% rate, which marked a 41-year high. The pivot trade and the resurgence of meme stocks underscored the market's waning fear of Fed policy. But investors this week heard Fed officials voice support for a third consecutive rate hike of 75 basis points at the Fed's September meeting. Fed Chairman Jerome Powell will speak next Friday at the Central Bank Symposium in Jackson Hole, Wyoming. Bank of America said it holds the cyclical bear views that stocks have moved near to the top of their trading range and that the market has yet seen ultimate lows, which may come next year. Among its reasoning, it outpointed that every $100 of bonds the Fed bought during the global crisis, totaling $5 trillion, it has sold just to $2. With inflation on course to be 5% to 6% next spring, quantitative tightening is likely to be stepped up significantly in coming months, which would be negative for credit spreads and equity multiples, said Bank of America Securities Chief Investment Strategist Michael Harnett in the note. Meanwhile, housing trends are already menacing, and the means as Fed tightens policy further that credit, consumer, and labor markets will likely come under deeper pressure, and that's negative for corporate per-share earnings. In short, we prefer to be long stocks at 4.5% unemployment rate, not at 3.5% unemployment rate. The blowout July jobs report showed that unemployment rate fell to 3.5%. A rise in the unemployment rate would stall activity among retail investors, B of A said. The S&P 500 summer surge featured a July advance of 9.1%, the largest monthly rise since November 2020. The rally has been narrow, with B of A determining that 4 stocks, Apple, Microsoft, Amazon, and Tesla, contributed 30% of the S&P 500's gain during its latest rally. Large cap tech stocks have particularly been battered during 2022 as investors positioned themselves for an aggressive rate hike cycle by the Fed to battle burning inflation. B of A said it is now pragmatically bearish for 2022 rather than dogmatically bearish, partially because of services. Inflation quickly follows good inflation lower. That would be bullish for prospects for the consumer price index declining below 4%. As well, if there is no U.S. economic recession, that is bullish for corporate profits in this current era of government bailout, said the bank. In 2022, the politicians are panicking and subsidizing consumer spending on energy, oil, gasoline everywhere from San Francisco to London to Berlin, no matter what long-term climate consequences. If you are worried about the economy heading into a worse recession, why not write a book today? Become an entrepreneur with me. Start your brand new life with an abundance mindset. You can create your own future and decide how much money you're going to make in a year. And no more worries about your boss's comments or ridiculous orders. No more being stuck in traffic or waiting just to get to work and rushing here and there to do so much. What do you want to say to your boss right now? Let me hear in the comment section below. So now I'm going to show you my two clients' book, Ignite the Passion, Co-Create Your Dreams. This book is by David Vine and Jama. The foreword is written by Abigail Sinclair. This is a co-author collaboration book with 8 other authors. It's so incredible, has so much good entrepreneur tips and tricks and business ideas. So if you are looking at starting your own business, I will post the link below for you to order a copy. This is my client Lee Vincent's book, The 3 Most Important Influencers You Need to Meet. Even if you may not have known them for so long now, the foreword is written by myself. It's such a good business book, this one. It has so much good motivational content and so much business knowledge in this book. So it's not a very big book, but it's just incredible. So I will post the link for you to order a copy too. And then Wicked Pussy Perfume by Teddy Eazzy. So this one is such an incredible erotic novel. I will post the link for you to order a copy. It's such a good story. He's actually started his 2nd book too, so I'm very excited to see how the next story goes. So this one was very good. I'm going to actually read Women Can Be Very Manipulative Creatures that could ruin your pocketbook in an instant. So this is my book, The World is Awakening, and this one is so incredible. I really think that the world is waking up, and people want to actually step outside their comfort zone and write books and become entrepreneurs and work from home. So if that is you, message me today. I will post a link for you to order a copy of The World is Awakening. And the last one, Time, Awareness, and Secret Millionaire. I will post the link for you to order a copy of this one too. This is another incredible book of mine. So who doesn't want to be a millionaire, right? So those are my today. I hope you've enjoyed my video. Please like and subscribe to my channel. It would mean so much. And I hope you've enjoyed my video. Thank you for watching. Have a great day. Bye, everyone.